So before there was ever banks to help you buy a house, guess who did? Yep, your neighbours. Today I want to tell you the story of how a few working class dreamers in an 18th century pub created one of Britain's greatest financial inventions, the building society. Let's set the scene. It's the late 1700s. Britain's industrial revolution is roaring. You've got factories churning out goods, railways are expanding all over the country, and towns are exploding with workers chasing better lives. But whilst wages were improving, the banks still turned their backs on ordinary people. Mortgages were only for the landed and the wealthy. So if you were a blacksmith in Birmingham or a tailor in Leicester, your only shot at owning your own home was to build it yourself. So what did they do? They clubbed together. In 1775, a pub landlord in Birmingham called Richard Ketley saw the problem firsthand. His customers all had jobs, savings and ambitions, but no access to loans. So he gathered them together at his tavern, the Golden Cross Inn, and said, if each of us chips in a few shillings a week, then every month one of us gets to build a home. And that became the world's first building society. No banks, no brokers, no credit scores, just community trust. And each time a house was built, the members would celebrate together. In the pub, of course. It was financial cooperation, Victorian style. And the idea caught fire. By the 1830s and 40s, new building societies were springing up all over the place. Leeds, Huddersfield, Halifax, Loughborough. At first, they were known as terminating societies. Everyone paid in until every member had a home, and then they would just dissolve the society. But soon came the idea of permanent building societies. Funds were recycled, new members joined, and the pots just kept growing. This shift made them sustainable. They became the backbone of working class home ownership. And unlike the banks, these societies were mutuals, owned by their members, not shareholders. Profits weren't shipped off to investors as dividends. They were reinvested or returned to the members as better interest rates. It was community finance with a conscience. And this is why so many building societies of the day had names like the Friendly, the Provident, or the Permanent. And by 1900, there were over 2,000 building societies in Britain. They helped millions of homeowners. They built suburbs, stability, and self-reliance. The true British worker's dream. And some of those societies have become the financial giants that we know today. The Nationwide began in 1846, originally called the Cooperative Permanent Building Society. Halifax launched in 1853, and Leeds Permanent and Yorkshire Building Society followed soon after. Between them, they financed the rise of the Victorian terrace, the suburban semi, and later, the post-war rebuild. You could say that Britain was literally built on the backs of building societies and the members that owned them. But the real disruptors were men in flat caps in a smoky pub in Birmingham passing a hat round. They literally invented crowdfunding, mutual aid and micro-lending long before the internet ever existed. Even after the demutualisations in the 1980s and 90s, where some of these mutuals became banks. The mutual spirit still lives on. The Nationwide, Yorkshire, Skipton, they're run for members, not shareholders. And when you open a savings account or take out a mortgage with one, you're helping to continue a 250-year tradition of people helping people. So next time you hear somebody saying, it's just a bank, just remind them that before the boardrooms and balance sheets, there was a community in a Birmingham pub that proved that ordinary people, when they worked together, could achieve extraordinary things. Give me a follow for more of the history of money, insurance and mortgages, where finance gets fascinating. See you next time.